Okay, good afternoon, everyone. Good afternoon, everyone. Could I ask colleagues to take their seats and let me welcome you all to this high-level policy forum on the communication of financial stability analysis. Um, Personally, I'm absolutely thrilled to see so many familiar faces here today, and I'd like to thank all of you for coming. Uh, so the idea of convening a special conference to commemorate the 20th anniversary of the Financial Stability Review surfaced about a year ago at the traditional celebratory drinks get-together of the FSR team, which usually takes place on the evening after publication. Now, while we organized this event to commemorate a product, I remember some of us used to say a report that, if dropped on a desk, would make a loud thud. It also is a commemoration of all the people who contributed to the FSR over 2 decades. So I'm absolutely delighted that we have three colleagues here today, Inés Cabral, Thomas Garbarovicius, and Stefan Vredenborg, who worked with me on the very first issue back in December 2004. On this anniversary, I think it also seems fitting to pay tribute to Ivan Alves, my colleague and dear friend, who we sadly lost 8 years ago. Without the unwavering support and commitment of Ivan, I'm not sure that we would have made it past the Governing Council back in 2004. So the objective of today is to draw lessons from the past on effective communication about sources of risk and vulnerabilities which might threaten financial stability. Much has changed since 2004. The euro area financial system has become more market-based. Information and methods for financial stability analysis have improved, and communication channels are more diverse. So to enable discussion on these issues, our forum is split into two sessions, the first on financial stability communication and the second on financial stability analysis. And we are honored that Stefan Ingves and Sarah Breeden agreed to kick off these two sessions. And for us, I mean, it's really apt, as our FSR journey began naturally by looking at what the others were doing. At the Bank of England and the Riksbank, along with the Norges Bank, were the first movers in this space. And we drew a lot of inspiration from reading their publications. Call me old-fashioned, but I'm a great believer in maintaining traditions, traditions which build and hold teams together. Convening this forum today meant postponing those traditional team drinks until tomorrow. But in every cloud, there is a silver lining. And at those drinks, we have a tradition of selecting what is known as the chart of the FSR. And there is a prize at the end to the winner of that competition. And I see an opportunity for audience participation in this. If you spotted a chart in the FSR that we published this morning, it was presented by the Vice President to the press, and liked it, just let someone in the organization team know which chart it was. Now, as many of you know, organizing events like this involve a lot of work, and I would like to express my gratitude in particular to Desislava Andrieva, Sandra Garda, Inka Cordero, Paul Hebert, Nicolina Mihili, Stefan Seitz, Anna Katerina Sinch, and Christine Verheim and Stefan Vredenborg for the roles that all of them played in making today happen. And so now, without further ado, let me invite President Lagarde, who has presided over, I think, 10 Governing Council discussions of the FSR, to give our welcoming address.
Well, thank you very much, John, and good afternoon to all of you. Good morning to those who listen online from other corners of the world. And let me tell you that it's not so much in a spirit of commemoration, but in a spirit of celebration that I would like to introduce this afternoon. And first of all, it's really nice to see so many of you in the room in attendance. John, thank you very much for this quick introduction. Mr. Vice President, my dear colleague, governors, former governors, dear Stefan, current deputy governors, dear Sarah, and all of you, welcome again, and thank you for your contribution to the actual framing of the afternoon. As Ralph Waldo Emerson once wrote, "The years teach much which the days never know." And it is obviously fitting given that it's a 20th anniversary. We're talking years here, not days. And one of the value of the work that is done by your team, John, and all those who have worked, including those not with us today, has been to look not at the day to day, but at what is to be expected and what has happened that can inform those expectations, taking a slightly longer term appreciation of developments rather than the daily one that we are glued to at the moment. But it's remarkable to look back at those 20 years of the FSR and to observe and to think back to 20 years ago and to observe what has happened. We have seen two significant financial crises: the global financial crisis and the sovereign debt crisis here in Europe, as well as, what some will call maybe smaller episodes during and after the pandemic. We have seen major structural changes in financial intermediation, non-banks, the NBFI, also otherwise called the shadow banking system, which we have dropped now to the favor of NBFI, have doubled their financial assets since the global financial crisis. And we have seen profound institutional changes. In particular, the SSM, the Single Supervisory Mechanism, was set up exactly 10 years ago to supervise significant institutions. And in the same year, the ECB assumed a macroprudential policy mandate. The authors of the FSR had to navigate all these shifts in real time, from originate to distribute business model amongst banks, to the dash for cash, some of you would remember, to financial stability implications of climate events, to cybersecurity risks. The FSR stayed on top of developments and adapted over the course of time. It demonstrated focus and flexibility. First, the analytical focus of the FSR has deepened as the environment has changed. There's no doubt that the episodes of stress we went through and the blind spots that they revealed led to substantial improvements in analysis. The global financial crisis, for instance, led to more targeted discussions about interconnections. In particular, the ECB went deeper into the vulnerabilities stemming from property markets, exposures to the non-bank sector, and the spillover between and amongst monetary union members. By contrast, the sovereign debt crisis revealed limits to area-wide analysis and the need to examine heterogeneity, focusing on conditions in specific countries. This episode sparked multiple advances in sovereign risk monitoring. For instance, ECB researchers went on to develop the Sovereign Composite Indicator of Systemic Stress, an indicator measuring stress in sovereign debt markets that now features regularly in the FSR. The deepening of focus has been aided in recent years by substantially improved data availability, allowing for a broader picture in the FSR. We can now benefit from using harmonized supervisory data like COREP and FINREP, which provide us with banks' capital adequacy and financial information, as well as the ECB's ANACredit data. It was much debated when I joined back in 2019, but this is now certainly currently available and to quite a few of us. And that offers detailed analysis and detailed information on individual bank loans in the euro area, which enable the analysis that can be conducted in with a much deeper perspective. It is impossible to anticipate every event that affects financial stability, but this deeper focus puts us in a much better position to assess financial stability risks compared to when the FSR started 20 years ago. So that's for the focus. Let me now just say a few words about how flexibility has been a key attribute of the FSR over the years, evolving to reflect wider shifts in the financial landscape of the euro area. Today, the FSR devotes a standalone section entirely to non-banks, discussing the trends and vulnerabilities in these institutions and their growing interconnectedness with traditional banks. There is also a section on macroprudential policy issues, the aim of which is to link vulnerabilities with policies, as well as a section on the risks and vulnerabilities related to sovereign debt. And in a world where information is abundant, there has been a clear trend towards making the FSR more impactful and more reader-friendly. 20 years ago, you know how long the FSR was? Well done, more than 200 pages. Thank you. Here is somebody who's read it back 20 years ago. Yeah, absolutely. You made us thought. Now it's down to 100 pages, about half what we had in those days. So key messages are relayed now, not just in the report that you have dutifully read, but also in social media, with topics on climate change, technological innovations, including crypto assets and artificial intelligence, garnering particularly strong interest among users, even well after publication. The last 20 years have witnessed a tremendous amount of transformation. Robert Frost, the poet, not the banker, once joked that he could sum up everything he learned about life in these words, 3 words. It goes on. The same holds true for developments in financial stability. I have no doubt that we will see plenty more evolutions to come ahead of us. But despite all this change, one thing has stayed resolutely the same: the rigor and the relevance of the FSR. And I trust that this will continue over the years. And I know that you will continue to dedicate all your energy and your brain power to making this product an alert, agile, and absolutely relevant one. So to you, John, and through you, all those who participate in the effort under the able leadership of the Vice President, thank you very, very much. And I guess the panel now is starting.